we run a short-term rental business and we had $200,000+ of cancellations in one day. That was pretty much all of the revenue for that year. We watched our business vanish overnight. I think one of the conditions that I was endowed with, for better or for worse, is that I simply wasn't good enough. That was a belief that I had in myself, that I didn't match up. I wasn't really that smart. I wasn't really that successful. I really wasn't worth my salt. It's difficult to describe what waking up every day, wondering where I am and why I'm there, felt like. It didn't threaten failure, but it felt pretty bad to spend $10,000 and get nothing in return.
Behind the Hustle. What's up, everyone? Welcome to Behind the Hustle, the show where we fight back against success porn on social media. If you're anything like me, you're sick and tired of being bombarded with endless success stories, and you know they're just the tip of the iceberg. I interview successful entrepreneurs about the realities of their journey, the setbacks and failures, mental health consequences, and most importantly, how they endured for a long time before ultimately finding success. No matter where you are in your entrepreneurial journey, hopefully this is a reminder that you're not alone when things get dark and a source of motivation for you to keep going. My guest today is Noah Hoffman. Noah is a co-founder of Arbor, a Michigan-based property management business that he scaled to a large portfolio of residential properties in 5 years. He also founded Smoke-Free B&B, a de-smoking services business for short-term rental landlords. His career began in the dark depths of investment banking and real estate private equity, and he experienced his first taste of entrepreneurship when he launched trendy fashion brand Strapped MFG in Los Angeles. Suffice it to say, this man has seen a lot. Noah, welcome to the show.
Thank you, sir. It's a hell of an intro.
Course. You weren't always an entrepreneur. Obviously started with the whole corporate grind. We were at Deutsche Bank and investment banking together, but at some point you decided to start a company, and we know that ultimately didn't work out for you. So I think I kind of want to start there. Strapped MFG was a fashion brand that you started. So can you just give us a little bit of background on why you started that company, what it was, and we can go from there.
To talk about why I started it kind of has to go back to what I did between working in banking and working in private equity, which was I actually traveled to Malaysia and Bali to study to teach yoga. I got my yoga teacher training certificate. And while I was there, I was in this totally unfamiliar environment. And in doing so, I challenged myself to a degree that I thought I could probably endure, but didn't really know. And when I succeeded at that and really enjoyed it, I then got back to LA, started working in private equity, worked at a desk every day. And honestly, my shoulders started to hurt. I wasn't feeling great. And pretty quickly, I met two people. They both would become business partners of mine in separate companies, the real estate company and Strapped. I started the clothing company, I think mostly because the gentleman who I worked with, his name is Jordan Wisely. He's a pretty well-known TV personality. What struck me about him was that he was an incredibly talented designer. I saw talent in this person. And he designed motorcycles. He manufactured motorcycles with his two bare hands. He was a leather goods designer. He made leather bags. And he had designed a denim and leather jacket in a pattern that I had never seen before. And I'd always been interested in fashion. I thought it was intellectually curious how people used clothing to sell themselves, to represent something about them. And I also, to be perfectly honest, was at a point of my life where I had this itch that I really wanted to scratch of like being around famous people. I'll be honest, that was part of the draw of him. It was part of the draw of starting a fashion brand in LA. Serves as a cautionary tale because that was one of the worst reasons to start a company you could think of. And that would come to a head at some point. So I really started it out of some combination of like curiosity in the product and some semblance of like vanity, to be honest. I kind of thought I could do it. I was like, this can't be that hard. I'm with some famous guy. He's a good designer. You know, we use social media and boom, you've got a profitable fashion brand. That's not what I really thought would actually happen, but somewhere in the back of my head, that's kind of what I hoped. And that's also a cautionary tale of you don't want to start a business based on hope.
Did you have like any sort of thesis? Like at this time in your career, you had been through investment banking, private equity. You've always obviously done personal investing with your trading background and everything. Presumably you didn't just jump into it. Did you have
No.
some plan in your mind of how you were going to execute?
Yeah. So how it actually happened was I said to Jordan, this idea you have for a jacket seems pretty interesting. Let's go find a manufacturer. Let's find somebody who can make us a prototype. Just one jacket, literally one jacket. We made the jacket and it looked awesome. So he started to wear it out. And every time he wore it out, people were complimenting on him on it. And then I started to wear it out because I was like, maybe this just has to do with you being like notable, maybe it's just you. It was not just him. I was getting compliments on it. That was when I was like, maybe there's something to making more of these because leather jackets sell for somewhere between, I don't know, $25 and $2,500.
Mhm.
And I figured that if we could be smart about sourcing materials, find a manufacturer and get them to love us, pay them really well, meaning on time, which is much faster than most brands would pay their manufacturers, maybe we'd get people who could cut us a deal and we could kind of scale it slowly. I also thought that the secret sauce to clothing companies was branding. It was marketing. It was being proximate to famous people. And by the way, I think that's still true. And so I thought we had an edge. I said, I think we have this opportunity to combine access to celebrity with really nuanced, high quality design. That was the impetus for me actually putting together a business plan of like, okay, here's what I think it's going to take in terms of investment to have a minimal sized line of products, call it like 10 SKUs, that we could reasonably take to a VC or an angel and say, we think that we can sell, 300,000 to a million of this at a 25% margin. I looked into what I thought the costs were and had a pretty good idea. I didn't, have a bulletproof idea, but I think I was pretty close when it actually came down to it. The one thing that I got massively wrong was actually two things. One, just how much money a fashion brand has to spend on marketing, the sheer amount of money, what it means for your margin. And then the other thing is how much inventory burn can fuck you. It will just end your business if you do something and you spend a bunch of money on inventory and then you can't sell.
Let me dig in there on the inventory piece. The marketing piece we can get to as well. So, isn't there a way to sort of hedge that risk by doing like a small inventory run up front?
You can, but it depends what segment of fashion one plays in. If you play in high end fashion, then you're dealing with seasonal runs and you only have a select amount of time to sell a certain type of product because your customer base is all looking for that type of product. And what you try to do as a high fashion brand is beat the other companies to the style that people end up wanting. So you kind of have to predict what the big brands are going to do and what the next big thing is. And so we thought the next big thing was going to be this like shoulder bag that was for men, and like other small kind of like streetwear companies were starting to do it. But we thought that if you did it with leather, really high manufacturing quality, handmade, that would make a splash. And the requirement to make that stuff in a lead up to a season doesn't give you the opportunity to make some small run, test it, and then if it goes well, make a bigger run. There's just not enough time. You can end up in a position where you made a bunch of stuff and turns out people didn't really like it. You didn't spend enough to market it. Then you end up in like this, very bad cash position.
I was just gonna talk to you about how apparel is a notoriously difficult business, but it sounds like high
Horrible.
fashion, like the high fashion niche or subsector of apparel is like an order of magnitude more difficult.
There's truly a handful of designers and brands at any given time who can successfully do this. And
Mhm.
it's such a weird business because to successfully do that, you have to create your own demand. You have to convince the world to pay multiples, orders of magnitude more for a product than what it is actually worth.
Mhm.
There's no reason why you should be able to sell a t-shirt for $200 that's made out of cotton.
Right.
There's no reason. It's so funny because Mike Amiri of Amiri Brands, it's a very popular clothing brand now. When we were starting, Mike was manufacturing with the same guy we were manufacturing with. We were in the factory. It was a very small manufacturing facility, with him, with Jerry Lorenzo of Fear of God. And I can't emphasize enough how we were all struggling with this same mentality of like, what do we do? We have to come up with shit. And then this is the unique thing that we didn't have. Those two other guys did have it, is they had access to higher profile individuals, and they had access to a very specific set of individuals. One that happened to be the tastemakers of the time, and that is NBA players. Mike Amiri, he actually came from the rock and roll world, but he became friends with some guys who played for the Lakers, and they started to wear his clothing, specifically the ripped jeans with paint splatter on them. They took off because I think it was Kyle Kuzma started wearing his clothing. That turned into R&B and rappers. They really drive fashion. It is that group of people, NBA players and R&B artists, who, if you're really being honest, they drive the cultural heartbeat of fashion. Jerry had access to Justin Bieber through a church. Jerry styled the pastor of that church, and Justin Bieber liked it. And so Justin Bieber then, I think he invested in Fear of God and co-signed on it and then started, popularizing it. They had access to these really high-profile athletes. They were also very smart about producing a small set of goods, pricing them extremely high. They got in the highest end retailers, like true physical retailers in LA and New York. And that is where the stylists for celebrities go to shop. They knew this. They played that game extremely well. They worked with the buyers for those shops. I'm sure there was whining and dining, and it all went really well for them. Now, I'm not to say that this was not without struggle. I'm sure it was. But that is how they attained massive success, frankly, without spending a ton of money. And that was not something that we were successful at doing. I ended up running into Mike Amiri in Vegas, and he asked me what I was doing now. And he said, man, I wish I was doing that. He said, I wish I had done real estate. He's a great guy, very smart, very quiet, very thoughtful, very humble. We talked about what his success was attributed to, and he didn't come out and say what I just said, but when I said I thought that, he didn't disagree. And I don't think he would. Now, that's not to take away from him as a designer. I give him all the credit. I think he crushed it, but he was one in a million.
It's funny that you say that as you're talking through what it takes to be successful in this apparel business. And like, as I think back on my own journey and I talk to other people about what businesses they've pursued, it's kind of occurred to me that there is a spectrum in business of circumstances you need in place to be successful. On one end, you have like a door-to-door painting business. There are no prerequisites to get started. You go buy some paint, you knock on some doors of some like rundown houses and say, I'll paint your house, pay me X dollars, boom, you're in business. On the other end of the spectrum, you have building and monetizing a renewable energy plant, okay? Where we don't need to get into like how many, like all the different sets of circumstances and access you need to make something like that happen and actually make money. This apparel business that you were starting is like way closer to starting a renewable energy plant than to painting someone's door.
You need so much access, and then to take it a step further as to why this is even a harder business to start than a renewable energy plant, there is almost no leverage that a fashion brand gains over time from investing their thought and time or money into assets. What you do as a fashion brand is you design clothing and then you sell that clothing. Now, the one thing that you do get theoretical leverage from is brand, but there is way less than you might think. It's super expensive to create. You can do it. I know of brands that simply spent their way to notoriety and they're now successful, but they're only successful to the degree that people know about them. And I would bet that if you looked at their company and their actual margins, if they're eclipsing 10% net margins, I would be shocked. And most likely they're sitting around 5%. That's if they make money. I don't know that they do. The point is that you can spend your way to a brand that people know. The problem is that other brands are gunning for you every day. And you don't have any real leverageable asset that's like protected. Think about how Amiri surpassed Tom Ford or surpassed Rag & Bone or surpassed Hermes. I mean, they have. That happens all the time. I know Amiri now has to continue to spend more and more money to convince celebrities to wear his clothing, to convince billboards to, put them on there. That ain't cheap. And when your ultimate net margin isn't super high, now I think his probably is, once you get to scale and you can manufacture reasonably inexpensively and you can set almost any price for your good because people associate a high price with value, there's a good business there. But it takes so much money and so much time. And even 10 years down the road, 20 years down the road, one bad season and you can fuck it all up. Mm-hmm. It's not like you're sitting on some mountain of cash. You have massive variable cost and massive fixed cost. You have to keep selling at that really high price in order to make money.
Have you heard of this company called Cuts Clothing? It's basically just good looking, like daily / workwear for like the millennial, right? And it's high quality, but it's not at a crazy price point. So basically, yeah, it's this type of clothing. Yeah, these t-shirts, I wear them, like you'd feel comfortable wearing them in the office, but also out for like a Saturday, whatever, some joggers, some hoodies and so on. This brand has been incredibly successful and I've bought in their clothes multiple times. I understand that this isn't exactly high fashion. How does someone get successful starting a clothing brand like this?
How do you know they're successful?
I clarify. I don't know how much money they're making, but they've been around for a long time, and their product is very, very good. Okay, that's a start. They may be burning cash, but presumably they're not burning that much cash because they're still alive. And I've heard more and more people talking about them. I've seen people wearing their clothes on and off public media, like friends, but also like influencers and so on. This is clearly serving a market need, right? Like before I saw this company, I was like, like I can't really find the exact kind of minimalist clothing I want to wear that straddles my like work and play life. And then I saw this company, I was like, bang, like I'm going to try it. It was great. And then I bought 6 or 7 pieces from them across my wardrobe. And I basically wear that and Lululemon and Uniqlo, and that's it. Like I'm a pretty basic customer, but there's a lot of people out there like me. So I do think it's solving like a pretty big market need that at least that I didn't think was there before. There's competitors like Viore and stuff. It seems like a good space to be in. How does someone build a company like this?
Long story short, that is not a clothing company. That is a marketing business that happens to sell clothing. Any fast fashion retailer, just like any relatively low price but high quality marketing business, that you could sell iPhone cases, you could sell, flip flops, you could sell sunglasses. There's tons of them. You're running a math equation of customer acquisition cost and customer lifetime value. And then you're maximizing the value and minimizing the cost and doing that over and over and over and over and over again. That's all you're doing. I would argue you don't need that good of a product. It helps for sure, but I would be shocked if you can't find a very similar product to Cuts. If you can't go on Amazon or go on another brand and find a very similar product, I'd be shocked. And the reason that I'd be further shocked is that they exist and somebody's copying them because somebody knows that they can make that cheaper than the way Cuts makes it. So somebody is a really good marketer at Cuts. They're good at figuring out who to hire on TikTok, on Instagram, who to make their tastemakers, how much to pay them. There was a huge movement in 2018 and 2019 towards, actually probably before that, 2016, 2017, towards micro-influencers. That was this real value driver for a lot of brands like this that started around that time that figured out that if you found people who had 2,000 to 5,000 legitimate followers, so mostly like attractive guys and attractive girls with big friend groups who like random people happen to follow, but who hadn't purchased followers, who had high quality engagement, and who had people who were like them as their followers, you could pay them next to nothing. You could basically give them free shit and they would post and you would make money hand over fist because those customers were so cheap. And then once you acquired those customers, they had a lot of lifetime value if you could market to them well. This business is being good at that. This business is not being good at fashion design. It's not being good at hiring the right manufacturers. It's marketing and math. And then there's like a little bit of fashion behind it, but tiny.
It doesn't seem like those are the certain set of circumstances a new entrepreneur would want to like start their journey under. If you're passionate about making clothing, for example, not just you, like anyone, or you're passionate about selling widgets, if your profitability, your long-term profitability comes down to how good you are at that math equation, that doesn't sound like potentially a good use of your time. Cuts may be very successful, but because they have the set of circumstances behind them where they're very good at marketing and they've dialed in that formula, I'm just thinking out loud that a new entrepreneur who is excited about getting into some space where how profitable they are is a function of that math equation is not a good idea. Versus like, I have a thesis, I can go execute because I can deliver something that people need. right? Not necessarily how good I am at marketing. A lot of
Yeah.
entrepreneurs probably fall into that trap.
So I think this touches on a concept that I feel is incredibly important. There is an obsession to start one's own business. Right out of college, to start right away. You don't want to work for someone. Screw the man, screw the system, blah, blah, blah. I don't want to be an employee. I could not disagree with that more. Don't do it right away. Go work for a competitor. Go learn how somebody else does this. And if you can do that and suck the knowledge out of that experience, work, learn, absorb, listen, turn on all your senses, get your hands dirty, jump in, and then years later, be patient. And you feel that, first of all, you have enough financial savings to basically earn no money for a long time, whatever is a reasonable projection until profitability or until raising a lot of money. Only then should one go do some entrepreneurial thing. I could not disagree more with somebody who's just out of college and is like, I'm going to go start a real estate investment company. I'm going to go start a fashion brand. Couldn't think of a worse idea. I just couldn't. I think that it's egotistical, ignores the reality of the world, and is very likely to end up in failure.
I could not imagine starting a company 10 years ago. It's shocking to me looking back. I don't know that much now, right? And I have 10 years of experience raising money, investing, doing all these things, understanding businesses. And it's shocking to me how little I knew when I first started. And you see these people starting businesses and stuff. That's kind of one of the reasons I started this series. Like, you get blasted these stories of these people who got it right. And it's like the tip of the tip of the tip of the iceberg.
To touch on the point of arrogance, I think that's a really good word for what I think is going on. Yeah, I think it's arrogant of people to believe that the smartest use of their time is to do rather than to assume that they don't know enough to do. Mm-hmm. And I think that is true for 99.9% of people.
What are the right set of circumstances for someone to actually make that jump and start their own business or pursue their own venture?
After vetting an idea with the smartest people that you know, if their feedback is like encouraging, then if you have the financial runway yourself so that you're able to put 110% into it, and you have the industry knowledge to navigate around the nuances of whatever business you're doing, I'm case study number one for the thing that I'm saying not to do, because I did this. I didn't know the first thing about fashion. And then I jumped in, and I mean, I learned a ton. Like, Jordan and I now know the fashion business like the back of our hands. But it is critically important that I implore people not to do that. I think it was a really bad choice. I learned a ton, but it was painful. I'm really happy with where I am. I'm thrilled, and I am so glad that I have the experience that I did with this shit show of a business, because now I have such deep appreciation for what a not shit show of a business looks like.
Yeah, so there are a couple reactions I have to that. First of all, I agree. Like, no one should do what you and what I also did with our first businesses. The reality is, the line of people that, regardless of hearing this advice time and time again, will continue to jump off that cliff will always be there. It's kind of one of the goals of this interview series is to like shorten that line a little bit. But the line will always be there. So all we can do is be like, look, this is what happened to us. Probably going to happen to you, but like, go for it and find out yourself. You made the point about you learned a ton. And this is something I think about a lot. Like, the amount I learned starting my last business, like the mobile ordering and payment software company, is like insane, right? The rate at which you have to make decisions and learn and get feedback is like comically fast relative to working a full-time job. And I think that there's this, similar to this, like this entrepreneurial desire that a lot of people have, that be like, I must start my own thing, guilty of here. There is this idea that, oh, it's okay if I start this company because even if it doesn't work out, I'm going to learn a lot. To me, that is like incredibly stupid. To me, learning is basically a guaranteed byproduct of taking action. And there's no bigger action taking exercise than starting a company. So you're going to learn. You're going to become more capable. You're going to become a more competent entrepreneur and business person and professional. That's kind of a guaranteed byproduct. But people underwrite their decisions as if that's the only value they're going to get out of it. Where it should be the opposite. It should be like, I hope I learn nothing, but this thing makes a lot of money. right?
Yeah, yeah,
And people
yeah.
underwrite it the wrong way. So before getting into what you're doing now and how you transitioned, how did the journey with Strapped end?
I'll start this answer by saying this was very painful. This process was probably the worst thing I've had to go through in my life. It caused a level of like sadness and self-loathing that I'd never known, and still to this day have not known. What happened was, for about 6 months, Strapped was my full-time job. Even before I left private equity, I knew I didn't really want to run Strapped. I knew that it was losing money. I knew that it was not a good business, and I simply didn't want to face that fact. I also felt pressure and momentum from my business partner and from the fact that I had boasted to friends and family that this thing was going to go well. And so over that 6 months of just purely doing it, right? No finance job, no paycheck, nothing to distract me from the reality that was this business is a failure. I got consumed by it. And what really happened is that the relationship between my business partner and I soured dramatically. I realized that I was being treated in a way that was inconsistent with my values and how I deserve to be treated. And that was also exacerbated by a lack of financial success. And that was the decision I decided I'm not going to be part of this business anymore. I said, I'm going to give you half of my ownership and I'm done. That was preceded by me having to tell our employees, which were close friends of ours. It was preceded by me having to tell my family and some of my closest friends, which was admitting that, first of all, many of them had been right because a lot of them had told me, no, this is an idiotic idea. And that never feels good. But it was a lesson that was earned and probably pretty valuable because it humbled me. And I certainly don't walk around with the type of hubris that I did then. And I think that continues to serve me today. But basically, we opened a store in New York, a pop-up over the holiday season. Thought we were going to sell a ton, sold next to nothing. And that was like the straw that broke the camel's back to me, where I was like, I don't want any part of this. There was a long time where we didn't speak. And that was really hard too, because he was one of my best friends, if not my best friend, for years. I can't emphasize enough how much that hurt me.
So how long was the period between when you saw that writing on the wall, I guess the straw that broke the camel's back, and when you were fully out of the business?
Probably about 6 months.
Did this result in any real negative mental health impacts for you that lasted for some period of time?
Yeah, unfortunately, I think one of the conditions that I was endowed with, for better or for worse, is that I simply wasn't good enough. That was a belief that I had in myself, that I didn't match up. I wasn't really that smart. I wasn't really that successful. I really wasn't worth my salt. And this reinforced that to an enormous degree. It's difficult to describe what waking up every day, wondering where I am and why I'm there, felt like. The worst part, my current business is based in Michigan, and I had gone to the University of Michigan in Ann Arbor, and I moved back to Ann Arbor where some of our properties were, and I rented an apartment in the summer of 2019 in the same building I lived in as a senior. I sublet a room in a 4-bedroom apartment for $300 a month. It was absolutely miserable. I worked from 8 in the morning until 2 in the morning. It sucked. I was the only person doing it, just me. I had a business partner who was doing a lot of the intellectual work, but he was still at a full-time job, still lived in LA. It was just me. And it was that period that was probably the hardest of my life because I was like, man, I worked in investment banking. I worked in private equity. I was like around celebrities and doing all this stuff. And now here I am back and living in like the building that I lived in as a senior in college. Like, what the fuck? That was pretty shitty.
Yeah, I can empathize with that. Like I had the whole investment banking, private equity background. I worked at a hedge fund. I was like, obviously, I'm qualified to go make a ton of money. And
Yeah.
first business fails, and now to like swallow my pride and preserve my ability to like stay in the game and generate cash, I'm consulting, right? And I've kind of gone through some, call it mental health struggles where I'm just like I should be better than this, but the world is telling you like no, you have to go back to your apartment in Michigan to do what at the time feels like starting from square one. So for me, to win a couple of my first clients, I did work for free, and I like super lowballed stuff, but worked and delivered value at what would command like a very, very expensive rate, but I earned almost no money for it, right? And you're sitting there just like, how did I find myself here? So I can empathize with that. I went through a period where like all motivation was sapped, right? Sounds like that may or may not have been the case for you. You were in a very dark place, and yet you had the motivation to work very, very hard to get the next thing going. It took me a period of a couple months of not doing much to kind of burnout detox, if you will, let the energy come back to me naturally. And then like now I'm in a place where I'm starting this interview series. I got my consulting and I'm like starting to shake things up again a little bit. Was there a period like that for you?
Honestly, no. I decided that I wasn't going to continue with Strapped at the very end of 2018. And at the very beginning of 2019, I shipped my ass out to Michigan, started staying in the properties that we owned already. So I wasn't paying rent. If those properties got rented, I would end up sleeping on my friend's couch. I mean, I literally flew straight from New York to Michigan. Our store was in New York. I flew to Michigan and I started painting kitchen cabinets and cleaning out units and doing basic electrical. I met a handyman here who, could teach me how to do a lot of stuff. And
Making no
I was just
money?
no money. I mean, the real estate business was profitable, but it was tiny. It made enough to like basically support me to eat. I'm talking like $1,000 a month. And I was still spending money out of my savings for anything that I was doing personally. Which luckily, like there was some savings there. Like I had been a smart investor, I had saved a lot. So it's not like I was like destitute. I've always been a pretty glass half full type person. I've really never been one to wallow in dissatisfaction. I really believe that you put one foot in front of the other, as painful as that might be, and as long as that tail might be, you got to do it.
Hey guys, if you're enjoying this video, don't forget to like it and subscribe to my channel. It really helps me out with the algorithm. Also, if you know any entrepreneurs who went through a period of real struggle or failure before becoming successful, let me know in the comments. I'd love to interview them. The more stories we can tell on this channel, the more entrepreneurs will be inspired to keep going when it gets dark and achieve the freedom we all want in life. All right, back to the video.
How did you buy your first properties and get involved in the property business, right? Because it seems at a high level that you went from like private equity guy to fashion guy to property manager and real estate owner. Now that I'm hearing the story, you already had bought your first properties. It sounds like maybe while you were in private equity or after you left and while you were in fashion. How did that whole thesis start?
We bought our first property we went under contract on that house, I think November of 2016. The entire time that I worked in private equity, I worked in PE, I was starting a fashion company, and I was buying and investing in residential real estate at the same time. By the time I left PE and was running Strapped full time, we owned 3 duplexes and a triplex.
So you had these properties as a side hustle and Strapped didn't work out, so you decided to throw yourself into the property business. What did your early work entail? Were you refabbing properties and trying to make them worth more so you could rent them for more?
So, we thought that Airbnb was going to be this big successful thing. We started investing in real estate to do that. Our thesis was basically, we think these will be way more profitable than a normal rental. And this was 2016 when we were thinking this, 2017, which definitely wasn't a novel idea, but not everybody was doing it. It seemed like it was a smart idea to do it in Ann Arbor, where you got the University of Michigan, big football stadium, big hospital. So, we were like, let's take this bonus money that we've made over our life, buy a duplex.
Yeah, I assume you were financing these properties.
Yeah, we got a Fannie Mae loan, a Fannie Mae mortgage. It was crazy. We like got it in writing from our lender that we could quit claim the deed from that property into an LLC because we bought it in our personal names but didn't want to own it in one for liability reasons. And my uncle's lawyer told me, no, you absolutely cannot do that. And I said, well, here's an email from our lender who told us to do that. And he was shocked. He was like, oh my God. So that was how we financed that first property. We put, I don't know, 20-25% down. And
how much capital, how much equity was that in dollars?
I think the property was $319,500. So whatever 20 or 25% of that is, I'm not the best at math. So I think like 75K is what we put down equity wise. And the rest we got as a mortgage. Yeah. We ended up spending another 20 or 30. We had to do like a big plumbing drain line fix that was like $10,000. We had to furnish it. I think we painted it or like redid the floors or something. But, this wasn't like a fancy property. This was just an average rental property in middle America.
So you're into this thing, your first property for call it like 100, 120 grand total. This is something I've always struggled with to understand how people are making a lot of money in these big real estate portfolios. Like, okay, you need to come up with 100, 120 grand. You made some money, you got some savings, you have a business partner. That's not that hard to do. You finance the rest. Okay, that money's now gone. It's in the property, right?
Mhm.
How do you go from one property to 10? Where do you get the money, especially if you don't raise it?
As a lot of people have done in short-term rentals, they started acquiring properties via leases. We were doing that too. We generated cash flow and built up the cash that we could use to reinvest in the company by signing leases, and they were profitable. Turns out COVID killed a lot of that. Good luck trying to do that today. But we were lucky in that from 2018 and 2019, that worked out pretty well. And that happened everywhere. You saw that all over the country. So that was what kickstarted what we could do. And when COVID came, that kind of killed that business or almost killed it. And there were a lot of learnings, a lot of takeaways from that process. We needed to get into the business of buying houses. And so when it comes to buying and renovating houses, the math is basically you figure out what a good buy price is based on when you renovate it, how much it's going to cost to renovate, and what the value is thereafter to end up with as little cash equity in the house as possible. And if you can do that, then once you get your final financing on the house via a mortgage, if you end up with almost no cash equity in the deal, then you can do that over and over and over again. And we had, friends or business associates who were willing to be hard money lenders, I think as is pretty common in the real estate business, that would provide us the capital to buy these houses. And with as thin of an amount of capital as we had we way overpaid or gotten into a situation where a house was like condemned or way overspent on a renovation, it would have been really detrimental to us.
It's based on what I've heard, it sounds like you got the business going by taking on a lot of financial leverage. Is that right?
Yeah, for sure.
And what made you feel comfortable doing that?
Well, yeah, definitely we got lucky for sure. We started buying real estate at the beginning of one of the best real estate booms in US history. Separately though, there's no business that comes without risk. This whole concept of I've got to hedge out all this risk, no, you have to be a little crazy. Nobody started these businesses that are very successful did it without taking a lot of risk. That's just not how the world works. Is just sitting in this comfy hedged position, but then ending up with this really high margin business. That's just not what happens. Risk gets taken by someone. We decided to do that. I think there's definitely a screw loose in both of our heads in that we believed very strongly that we could execute, like you said. To a certain degree, there's some ego in there. Yeah, we're just wired a little bit differently than other people, I think.
Yeah. So, this kind of goes to show that you're sort of 1 for 2 and you only really need to be right once. Can I ask how much you lost on the fashion brand if you're comfortable sharing?
60K.
60K. All right. So one bet is roughly double the size of the other bet when you talk about all the renovations that were put in and so on. Okay. You take that second bet and you executed and you got lucky and it worked, right? Once that business got going, what is the biggest lever in your business? If you could only pick one thing and everything else had to fall by the wayside, what would you protect at all costs?
Lack of emotional connection to our assets. You got to be willing to look at the numbers and know when to cut. And then you have to recognize when to double down.
Do you have examples of when you've cut and when you've doubled down?
A property that we designed really nicely, that we really liked, in a market that we thought would do really well, did mediocre. And a property that didn't look as sexy, but was crushing it in terms of numbers in a city that, we didn't really think would be very successful. You gotta know when to change course.
I think to transition, just a couple of rapid fire questions about real estate. If you are, and I recognize that the market today is very different than the market when you started, but if you're this aspiring entrepreneur and you have time on your hands and you want to do a side hustle, get into real estate, you have modest capital, not a ton, and you have sort of a basic understanding of business and finance, and you see like, okay, there's these people out there building this portfolio of quote unquote passive income. I realize it's not entirely passive because there's work involved, but this portfolio of so-called passive income, and you're hungry enough and you're willing to put in the work to do it, and you have no property. What would you do? How would you get started?
Go online and read Bigger Pockets, read other trade journals of real estate, learn what's going on, and go find a deal. Go
Right.
build a little simple model. Shouldn't take more than like 20, 30 lines in Excel, and understand the drivers, find a deal, talk to really smart people, talk to people who have done it before, ask them their advice, and then once you've done that enough, jump the fuck in.
And how do you select markets?
I think the answer is there's great deals in every market. You just got to find them. If you're limited by capital, that's somewhat of a driver of what market to be in. If you're trying to play in New York City, you got to have a lot of money. If
Yeah.
you are trying to play in Kansas City, you might not have to have as much.
So a lot of people who are probably interested in doing this type of thing live maybe in big, expensive cities, your San Franciscos, your Austins, your New York cities. But a lot of the opportunity is often in like tertiary or secondary markets, Ann Arbor, Phoenix, these types of things. Um, is it possible to invest in markets where you don't live and still make money? What are like some of the risks that someone should be aware of before deciding to buy in a market where they're not physically present?
You gotta have people on the ground to solve problems if it's a real estate business, because
Hmm.
things will go wrong with the property. The cost of that needs to be built into your assumptions, and be conservative about that. Don't think that, it's going to be easy or cheap to fix a lot of stuff. That's simply a variable in the equation. The other thing is, if you happen to have a market where you know friends or family who might be able to do favors for you without money being part of it, that's a great opportunity. Developing smart systems using technology. The internet makes most of property management possible by not being physically in the location. The reality is that I'm in New York a lot. My business partner's in LA a lot. We do have a team of people who are here on the ground, but we're really running the show. And the reality is, even when we are here, we're mostly in an office. So, like, me going to a property doesn't really matter that much. And to take that even a step further, when we owned only one duplex, if the furnace went out, what was I going to do? I can't fix that. I've got to hire somebody to go replace the furnace. There are very few things in a house that I could have physically fixed. There were basic things, but at the end of the day, those basic things I didn't really need to spend a whole lot of money to fix anyway. So you're basically running a remote real estate business, even if you live next door to the property, unless you yourself are very handy.
But if something goes wrong and let's say it's in your city and you have a team of people working for you, just like you would in a foreign market, there's always the backstop of you going there and looking with your eyeballs and talking to someone in person to to generate some result. If you're doing it in a foreign market, yeah, like people do it all the time. You have a team of people, you have contractors, property managers, blah, blah, blah. That still doesn't circumvent the trust issue. And the earlier you are in your journey, the more, unfortunately, the more you have to rely on trust versus judgment. Because like the more experience you have, the better your judgment becomes. So you have some amount of like raw judgment, which you use to like select people to manage your property, select a market, buy the property itself. But if something goes wrong, you need to trust that people are like managing your investment properly, more so than if you A, have more experience and you've done it for many years, or if you're investing in the market that you're in. Would you agree?
You got to pay for that trust, I think, at the end of the day. You can boil down a real estate investment to a cap rate. If I think about a cap rate in Kansas City or any, tertiary market, and I think that the cap rate is multitudes higher than the cap rate in a top 25 MSA, then there's a reason for me to want to pay some property manager to manage that property. I mean, realistically, the cap rate should reflect the property management fee, but even if it doesn't, and you're just saying apples to apples, if I lived in both places, hopefully the spread is big enough for you to go through all this effort to find a property in a market you don't live in, find people to manage it for that to make sense financially. If it doesn't, then why are you doing it?
Another question that's directed at these like aspiring real estate entrepreneurs, right? A big part of entrepreneurship in general, which I think our generation in particular and below has a lot of trouble with, is delaying gratification and recognizing that you need to put in a lot of time into something consistently without necessarily seeing big results, right? How long should the aspiring real estate rental entrepreneur expect to put in before seeing whatever you define as meaningful results? And that could be something as minimal as a clearly defined path to generating cash. What is a reasonable expectation of how much work and time is required?
Let me start by saying I missed a very important part of why somebody would want to invest in a tertiary market. And it's a really important part of that financial mathematical equation, which is the expectation that property values may rise more in those markets than in top 25 MSAs. So that can be a reason to do it as well, even if the cap rate is similar. And even if the cost of your time is baked into that calculation, you still might expect property values to rise more in those other markets than where there's already a ton of demand. The concept of delayed gratification and how long it will take to reach profitability or whatever signifier of success somebody believes is valuable, I think entirely depends on the person who's doing this goal. Hopefully you bought a property where you're profitable. If you're not, then the answer is however long real estate markets take to make whatever amount of percentage gain you think is important. If you make money, then leverage can get you to growth. And the combination of a lot of time and a lot of leverage and good economic circumstances and then discipline and not making big mistakes may result in quite substantial success reasonably quickly. Now, I can't put an exact amount of time or even a number on it, I don't think, because I don't know what kind of business somebody is going into. My business, it's taken years for us to get to a size where we're pretty financially comfortable. But I'll tell you, like, of our cash flow, we take less than 20% for two people to live. We're taking 80% of our operating cash flow and pouring it back into the business. We're not diversifying our investments. I'm not going and taking cash and investing it in the S&P 500. I believe that this thing is going to do for me what I want financially in my life. To your point about delayed gratification, that is a reflection of it. We've reached a point. To be candid, we could stop. We'd be very comfortable and work 20 hours a week, 15 hours a week, and be pretty chill. But we're both gunning for it because we think there's a massive opportunity and we really enjoy doing what we do.
You're 5 years into this thing, have created a ton of value, but have basically taken almost none of it out. If
Absolutely.
someone wanted to just create like a cash flowing project that they did on the side or get it to a scale where they could live off the rental income, it may take a little bit less time. They should probably still think in terms of years. But if you really want to create something that's super, super valuable, delaying gratification is sort of a cost of doing business. But if you really want to create generational wealth over a long period of time, that's what it requires, a long period of time. You're 5 years in, which in the grand scheme of things is not long at all, and you've taken almost no cash out of the venture.
Yeah, I think that it's really important when entrepreneurs get into this to realize that hopefully at some point they enjoy the journey. And I'm not assuming that you need to enjoy every element of it. There's things that we would not like to do that we have to do. Enjoying managing others, enjoying whatever it is that we do every day, that's gratification. So I'm not, and I have not lived in a world of delayed gratification. I've lived in a world of gratification that simply looks different than what I think a lot of people believe is gratifying, which is money or notoriety or like followers on Instagram. Those are things that may very well take a long period of time to attain. And if that's all that's going to make somebody happy, then they better be very comfortable being unhappy for, years.
I just wanted to ask one more question about your business. Now that it's like at scale and you've gone through the period of like getting it going and taking that initial bit of risk, that bet, what is the hardest thing that you have to grapple with on either a regular basis or even as a one-time thing now that you have a scaled company?
I think delegating and giving responsibility for things to other people that I used to do is hard. It's hard for me. I probably undervalue my time. And it's hard. It's hard to give responsibility for things that I do really well to other people. You got to be honest enough with yourself to let that person do their thing and not get in their way.
Yeah.
And what I think that doesn't get said as much about that dynamic, which is very applicable to a lot of businesses, it's that we're talking about people. We're not talking about computer A and computer B who are designed to do different things, and you put them together and you get massive computer AB. You have human A and human B with their own insecurities, their own problems, their own conditions, their own behavioral patterns, and you put them together and you might get AB because your individual intellectual, logical, or emotional skill sets complement each other, sure. But then there's the whole other part of it, which is that this is a marriage. You got to trust each other. You're going to fight. You're going to go through shit. It might get bad. You might not talk for a while. It's going to be uncomfortable. But each person, just like in any romantic marriage, has to fight for the business, the partnership. That has to be the overriding guide to how you integrate with each other. People are messy. There's emotions, there's words, you can't take it back. We have imperfect memories. We say things wrong, they come out wrong. And so I think that my business partner had a great point very early on when we started working together. He brought up a point that I think a former boss of his had brought up, which is the concept of being globally good. The concept of being globally good with respect to a business partner is believing that at the end of the day, that person has the businesses and therefore my best interest in mind. No matter how disrespectful what they say may be, no matter how difficult it may be to hear, even if they're wrong, we have grace for them because they are globally good. And I think that when I've taken that mentality and like really believed it, which I don't always do, I'm not successful at it all the time, but when I have, it's alleviated a lot of stress. And I think it has for him too. And I think that's resulted in growth of our partnership, which I believe to be incredibly strong.
What are some mistakes you've made over the course of building this business or over the course of your entrepreneurial career that at the time seemed like cataclysmic, like the biggest mistakes in the world, but when looking back, were actually pretty trivial in the scheme of things? I know I have my own, so just seeing if you had anything to share.
Well, with the clothing company, I'd say that it was like, spending a bunch of money on a form of marketing that we thought was smart, but turned out to be a total zero, namely social media. It didn't threaten failure, but it felt pretty bad to spend $10,000 and get nothing in return. In real estate, I think that we've never really made a bad buy. I think if we had, that's probably what would feel cataclysmic. We were pretty disciplined and pretty consistently successful in our growth and getting to a point of cash that made us feel safe. I would say that on March 12th to 15th, 2020, that was cataclysmic. We run a short-term rental business and we had $200,000+ of cancellations in one day. That was pretty much all of the revenue for that year. We watched our business vanish overnight, but I got to credit Nick. He saw things before Airbnb saw things. And we were able to capitalize on the situation at a time and in a way that no very, very, very few others did. It's some of those examples where I'm the most grateful for his being my business partner.
Can you elaborate on what that was like when COVID hit and your short-term rental business effectively went to zero?
It was terrifying. But he, and therefore we, were so quick to think through how to save ourselves that there wasn't time to wallow in, oh my God, what's going to happen? The only thing we could do was work. And we renegotiated contracts. We structured leases differently. We were lucky in that we got a small loan from a family member. Trust me, that didn't save everything. That got us about a month. And we were in the shitter for quite a while longer. I'm not trying to say that that was everything. It didn't make it easy. It made it palatable, but barely. I think that it was a time and an experience that gave us an enormous amount of confidence that if we could be successful through that, this real estate thing ain't that hard. It is hard. Don't let anybody tell you it's not. But we got through that. And so there was both that initial terror, there was an enormous amount of focus and work that had to happen, and then there was a breath of fresh air and a sigh of relief. And that has really, I think, taught us our capabilities for the whole rest of our time working on this.
Can you elaborate on some of the specific actions you had to take when shit hit the fan? Like you're like, oh, I restructured leases, like we got a loan. At the end of the day, though, people aren't staying in your places paying you rent.
We recognized that people were going to need to stay in our property. They just didn't know it yet. The reasons were we expected college kids to have to come home, and that their parents and grandparents, who they would probably go live with, wouldn't trust them to go in their house. And so they would need somewhere to stay. We believed that, I mean, it became clear. I don't think that we believed this. I think that we learned it by empirical evidence. Doctors and nurses who were working on the front lines of COVID in hospitals couldn't come home to their families, and they were going to need to stay somewhere. We also, by the way, had guests from overseas and from other states, and airlines shut down, and they were forced to stay in our units. And we believed that there would be a migration away from cities and probably towards big open spaces where there's a lot of fresh air, and we happen to be there. And so we changed the minimum night stay for our properties to 30 nights. And we did it days before a little window popped up on Airbnb. I think it said something like guests are really needing long-term stays, and look out for that or something like that. But the key driver that actually got us to that ability was that we still had some small bookings scheduled. People who thought, oh, COVID might blow over in a couple months, I'm not going to cancel my reservation. We went to those people and said, we're going to cancel your reservation, because we knew that we needed that long-term calendar to be able to be booked. We canceled those, or we got them canceled, and then people would book for weeks or months at a time, which really didn't make us very much money. We were probably about breaking even. For the most part, we were able to sustain the properties that we had. The properties that we own, that we had mortgages on, we got forbearance. There was 3 or 4 months of basically no interest and no principal repayment required by banks that the government instituted. We got a PPP loan, which was critical. I think we got a few $1,000s in some other loan that was possible. I mean, those are the real things that got us through that time.
If you could speak to your younger pre-entrepreneur self, what would you scream at him to do?
Man, be kind to yourself and be patient.
Were you unkind to yourself?
Yeah. I just deep down told myself that I was not smart, not successful, not worthy of any praise, a failure.
I know how it is, man. It's hard. Falling into that narrative of negative self-talk is easier than pulling yourself out of it. One of the reasons I started this interview channel is that I went through a very similar period to you. And at the time, I was bombarded by all these success stories. And I was like, didn't these people, before they got successful, go through what I'm going through? I need to hear that so I don't feel alone. And I'm hoping that shining light on some of these experiences that ultimately successful people like you have had will help some of the other people get through those hard times and find the businesses that they were meant to build. So thank you for sharing. Any advice you would have to entrepreneurs who are either just starting out, and this is assuming that they're starting out when they should be starting out, not people who are 20 and are like, I want to start a business, and no, go get a job first. Not those people. People who are positioned to start their own business, who are either just starting out or people who have been in the game for a while and are struggling to find success for a long time.
Be honest with yourself about the numerical basis upon which your business is built. The numbers, they don't lie. Really spend time with them and really, really think, are these numbers likely to change dramatically? If so, what is going to drive that change? If you think about that and you actually have really good basis for thinking these numbers are going to hockey stick up for some reason, then yeah, probably keep doing what you're doing. But if not, cut it and run and take it for what it was worth. And, maybe you did end up learning.
Yeah. In my last business, it was just so fucking low margin. And I was like, but we'll make it work by having scale. And ultimately we'll drive down our costs and expand our margin. Okay, sick if you can get there, and you can't get there because your margins are low. There was a period where I was not being honest with myself. And then I was like, wait a second, I'm so young. There's so much opportunity ahead. My time is worth more than this. Stop.
Good.
Thanks, dude. That was a really fun conversation. You shared a lot of valuable stuff about your journey, and you're kind of the ideal person that I want to kind of find to have on this interview series. So thank you, everyone. That's Noah Hoffman. Thanks for your time, bro.
Thank you very much. And I'm really, really grateful for yours and for giving me the opportunity to speak. I hope that it helps out some people.
Awesome, man. Alrighty. Thanks, everyone. We'll be back next time. Take care.
Hey guys, did you know we are in the middle of an algorithm hunger crisis? The algorithm survives on a diet of likes, comments, and subscribes, but it has a bottomless appetite. Like and comment on this video and subscribe to my channel to make sure the algorithm doesn't go to bed hungry tonight. I'll see you in the next one.